Hey everyone, welcome back to Stockora. Before you scroll away, before you click anything else, just give me a few minutes. Don't buy, don't sell, don't react emotionally, just listen carefully, because what Tesla and Elon Musk just did, most people still haven't realized it yet. And quick favor right now, if you care about smart investing, long-term wealth, and understanding what Wall Street misses, hit the subscribe button and turn on notifications. It helps the channel a lot, and it keeps you ahead of the crowd. All right, let's get into it. This wasn't just another Tesla earnings call. This was a turning point, possibly the most important moment in Tesla's entire public history. Most investors will look at the numbers, shrug their shoulders, and move on. And by the time the story becomes obvious, by the time the headlines finally change, it will already be too late. Because the real money is never made when everyone agrees. The real money is made when a company is deeply misunderstood. Tesla has been misunderstood since day one. Since Tesla went public, the stock has dropped more than 30% over 10 different times. Think about that. Over and over again, people declared Tesla done. And yet, if you had simply held Tesla from IPO to today, you'd be up over 33,000%. That's not luck. That's misunderstanding on a massive scale. And today, Tesla is being misunderstood again. On the surface, this earnings call looked average. Revenue was basically flat. Automotive numbers didn't excite anyone. Margins didn't impress Wall Street. If you only look at the spreadsheets, this was a boring call. But Tesla is not a spreadsheet company. What matters isn't what Tesla earned last quarter. What matters is what Tesla is becoming. And if you actually listen to Elon Musk, not the headlines, not the hot takes, something very important becomes clear. Tesla just told the world very calmly that cars are no longer the main focus. Elon openly said that Model S and Model X will be discontinued, and the Fremont factory will be converted to full-time Optimus robot production starting in 2026. Let that sink in. This isn't a prototype phase. This isn't a demo robot on a stage. This is real manufacturing. For years, people said robotics were far away. Elon just pulled the timeline forward and barely even made a big deal out of it. And that casual tone is exactly what makes this moment so powerful. When something truly matters to Elon, he doesn't hype it. He just does it. And it didn't stop there. Tesla now has over 1 million full self-driving subscribers. That's not a theory. That's recurring revenue already in motion. Elon confirmed that a robotaxi launch is coming, even without waiting for full regulatory approval. Select cities, real-world deployment, real data. This isn't about selling cars anymore. This is about building an ecosystem. A system where Tesla owns the hardware, the software, the data, and the network effects. And here's where most investors completely miss the plot. Tesla announced $20 billion in capital spending for 2026, focused almost entirely on AI, compute, training, infrastructure, and robotics. This matters more than any headline number, because talk is cheap. Capital allocation is truth. Companies can say AI 100 times on an earnings call. It means nothing unless they're willing to spend real money. And outside of hyperscalers like Google or Amazon, almost no company is committing capital at this scale. Tesla just did. That tells you exactly where Tesla is going. And while Wall Street obsesses over automotive margins, Elon quietly mentioned something else that barely made the news. Tesla energy demand is effectively unlimited. Megapacks are sold out years in advance. The only bottleneck is production capacity. Energy, robotics, AI, autonomy, these aren't side projects anymore. They are the future engine of Tesla. And if this sounds familiar, it should, because we've seen this story before. In 2022, Palantir looked ugly on paper. Margins were under pressure. Wall Street hated it. But Palantir didn't care about looking good for one quarter. They cared about dominating an entire sector for the next decade. Tesla is doing the exact same thing, just on a much larger scale. And that's where this earnings call becomes historic. If you're still watching, Drop a quick comment and let me know. Are you bullish or bearish on Tesla long term? I read every single one. Let's keep this discussion real. Here's the key idea most people still don't understand. This was the first Tesla earnings call that was essentially 0% about cars. Elon barely cared about near-term automotive performance. And yes, that's going to frustrate short-term investors. But Tesla stock has never been for short-term thinkers. Cars today are simply the cash engine funding the next evolution of Tesla. Right now, Tesla is fighting price wars in a brutal global auto market. That phase is temporary. Once full self-driving becomes truly autonomous at scale, the car itself stops being the product. The car becomes the printer. FSD becomes the ink. Chinese manufacturers can compete on price. They cannot compete on autonomy, data, or software ecosystems. And once FSD is fully unleashed, demand doesn't just return, it explodes. By the end of this decade, Tesla will likely sell far more vehicles than today, not because they're cheaper, but because they unlock value no traditional car can. Now, let's talk about Optimus. Optimus is not a robot product. It's a platform. Just like smartphones weren't about the device, but the app ecosystem, Optimus will be about recurring software, services, and AI upgrades. High margin, subscription-based revenue. Every robot deployed creates data. More data improves the system. Better systems drive more demand. That feedback loop is how monopolies are built. Tesla already did this with FSD. Robotics is simply the next layer. And remember, Fremont isn't becoming a robotics factory someday. It's becoming one soon. That's real commitment, real production, real risk. This isn't marketing. This is execution. Now ask yourself a simple question. How many non-tech companies, not Nvidia, not Google, can spend $20 billion in a single year without risking their balance sheet? Very few. Tesla has minimal debt, massive cash reserves, and a CEO willing to sacrifice short-term optics for long-term dominance. That discomfort you see in the stock? That's not weakness. That's growth. Killing Model S and X hurts emotionally. Margin pressure looks scary. Headlines sound negative, but all of that is the cost of pivoting from one business to a much larger one. Energy alone could become a $100 billion business. Robotics could become the largest market humanity has ever created. Autonomous transport will redefine cities. And all of this is converging faster than people expect, between 2030 and 2035. Tesla is not a car company. It is an AI infrastructure company. And investors who keep analyzing it like Ford or Toyota will continue to miss the point, just like they have for the past decade. So here's the real question. Do you want to understand Tesla before the narrative shifts or after? If you found value in this breakdown, share this video with someone who still thinks Tesla is just a car company. And don't forget to subscribe to Stockora. This channel exists to cut through the noise and show you what actually matters. Leave a comment with your thoughts, hit like if this helped you, and I'll see you in the next one, because this story is far from over. Let's keep this discussion real.